Today we're going to be talking about a new project within the luxury segment of the market. It's a commercial tower, and I believe it's a great product to diversify a portfolio or for an investment. But why are we choosing commercial, first of all? First of all, very limited supply of high quality buildings in prime locations. Occupancy rates are upwards of 95% in prime areas such as Business Bay, and DIFC is even higher than 98% at the moment. In 2024, 55,000 new businesses were created, which is a 17% year-on-year growth. And companies are attracted obviously to premium office buildings in prime locations because it gives them a good reputation with their clients as well. Yeah, this is the location of the project. You can see here it's connected to the metro station. This is the Emirates Towers metro station, right next to DIFC as well. So it's prime location for a company to be operating within this location. And because you're in this location next to DIFC, you can access all the top tier amenities, top tier restaurants, the 5-star hotels. Obviously you've got the Arts Club as well, which is a private members club, a very exclusive area to be operating a business in, very in demand as well. And obviously you've got Sheikh Zayed Road as well. So for connectivity, it's prime location. So we look here, this is the metro station, the Emirates Towers metro station. This is the building here, and it's a complete redevelopment project from AHS.
They're knocking it down, or are they?
They're completely renovating it. So they're taking it back to Shell and Core and completely renovating the entire building. I'll show you what it's going to look like. But that's the location, connected to the metro station.
It won't take too long to build then, right?
It's handing over in 12 months.
It's the one where Jordan sold it.
Yeah, and then you can see this location here. So this is obviously right in the center of DIFC, and then that's the tower there. And obviously behind it as well, when you're talking about a view, from this side of the building, you've got a 7-story car park at the back. So anything on this side has a premium view over DIFC. And also over here, you've got DIFC 2, which is coming up, which is 13 million square foot of further expansion to the area as well.
This was a closed down project, right?
It was a hotel before,
Yeah.
but they've just bought it, they've acquired it, and they're completely renovating it, taking it back to Shell.
Do you know how old the building is?
I'm not sure how old the building, but it's one of the oldest buildings, but they're completely renovating
They
it.
changed the facade on the outside.
No. Even outside?
Yeah, they're changing the outside. I'll show you what it's going to look like. That's what the tower's going to look like there. So they're completely changing the outside. And obviously this was the tower before. Probably know it when you're driving down Sheikh Zayed Road. It's quite an iconic building. But it's grade A+, handing over in 12 to 15 months. So the end of next year. Yeah, we'll go into more detail about it now. So 69 levels, 17 elevators. So that obviously for businesses, there's not going to be big queues in the morning, which is a problem in a lot of different offices. The views that you've got, either you've got Sheikh Zayed Road view at the front and over onto the sea, or on the backside, you've got the DIFC view, which is arguably more premium than the... So you can only buy half floors. So you either choose the DIFC view or the Sheikh Zayed Road view.
Less than half floor.
You can only buy half floor, but you can split the half floor into 2 offices. But that's the maximum you can split it. You can't split it any further into just tiny offices. They're keeping it very exclusive.
I have a question about the type of person that would buy this.
The type of, the commercial is either for businesses that are looking to operate themselves, or it's for purely an investor, right? Different to residential, because residential, you see more end users buying. It's a lot more driven by, mortgage buyers that are buying for themselves. Whereas the value of a commercial property is purely based on the rent that it's achieving.
So from an investment point of view, if someone was looking to buy a half floor in there, would they be buying it for purely rental yield?
Both. Both rental income, and we'll go on to the numbers at the end. The numbers are specifically given for rental income because it is a good rental product. It hands over in 12 months. But with the rental figures that we're looking at as well, you've got to think if an office is achieving, say, 10, 15% rental yield, you can't just acquire an office straight away now in the ready market and be getting 15% straight away. It's got to increase in value with the rent, This is sort of what the property will look like. The building, this is the arrival area. And then obviously you've got your grade A+ amenities. It's targeting the luxury segment of commercial space. Your competitors are like Omniat's Lumina project. These are the type of people that you're targeting. Obviously there you've got the Sky Lounge as well. These are sort of things that you don't find in standard office buildings. These are premium amenities. Gym as well, Sky Gym with the views both sides. These are all of the list of amenities. Like I say, you don't get these type of amenities in a standard office building. This is a bit about the developer. So the owner of AHS Properties is Abbas Sajwani. He's a local Emirati and he's the son of the owner of DAMAC Properties, Hussain Sajwani. They've started in 2017 and since then they've got a gross development value of over 10 billion worth of real estate, ready and off plan. And the minimum residential ticket to get into one of their residential apartments is 20 million dirham. So they're really targeting that like ultra luxury segment of the market. These are some of their ready projects. Palm Jumeirah, Emirates Hills. You're talking ultra luxury locations. These are selling upwards of 100 million dirhams, very exclusive for their own clients. And then these are their off-plan projects. Like I said, 23.5 million dirham is your entry level for a 2-bedroom apartment with these guys as a developer. And the locations that they're going on is Billionaire's Row, Water Canal, and the Palm Jumeirah. So very exclusive locations. They only deal with top tier clients. This is the architect that's working on AHS Tower. They've worked on Mars Al Arab Hotel, Museum of the Future, Address Beach Resort. So very credible people that are behind the project. And then the interiors as well. These guys, HBA, they've worked on Mars Al Arab again. Raffles, St. Regis, these 5-star premium buildings. The pricing of AHS Tower, this is where it gets interesting because the price per square foot is between 4,000 to 4,200 dirhams per square foot. For that location and that prestigious, office address, that's very low in my opinion. Full floor and half floor are available. Full floor is 28 million dirhams average and a half floor is 14 million dirhams and the service charge is 19 to 22. These are some of the grade A building competitors that are ready now that have been fitted out. They've got a fitted out rating as well. So the annual rent per square foot, so that's how you calculate a commercial building's rent. You do the rent per square foot. Now in the Opus, you're looking at between 600 to 700, even touching upwards of 800 dirham a square foot there. You've got Boulevard Plaza, which is in downtown. You've got some nice units in there with Burj Khalifa view, but they don't have the amenities that this project's got as well. One Zabil, obviously that's ultra luxury, 1,400 dirhams per square foot in rent. And then Index Tower. These are your premium grade A buildings at the moment. And the average rent just off of those is 840 dirhams per square foot in rent. The average rents in these buildings realistically in Opus is around 600 dirhams per square foot. That's in Business Bay. ICD, that's a development where you'll see that they don't actually sell resident commercial units in that project. The developer keeps it all to themselves and they rent it out to businesses. So that's another thing that's tightening the supply of commercial buildings. It's rare that you get a chance to invest into a commercial building because a lot of developers are actually building the properties themselves and renting it out because it's making them a lot of money as well. There's no need for them to sell it. They see the opportunity in renting it out. Boulevard Plaza as well, like I mentioned, again, a prime location, 600 to 700 dirhams per square foot. It's got a nice lobby, but in terms of amenities, it's very limited again. And then I thought I'd put Bay Square in there as well, just as like a comparable for just like a standard office building, a nice building, but not like your luxury market, to show you 380 dirhams per square foot. And I'll show you why I've included that now in the rental estimations on AHS Tower. So in the worst case scenario on this building, bearing in mind it's connected to a metro station on Sheikh Zayed Road, if you're only achieving 380 dirhams per square foot in rent, which is similar to what you'll see in Bay Square, that's going to give you a rent of 8.8%. That's a worst case scenario. For an ultra luxury building, I don't see that happening, but that's a worst case. Then a conservative estimate is 450 dirhams per square foot in rent. Again, you're still lower than all of these buildings here, considerably, your premium office space. At 450 dirham a square foot, you're still getting a 10.6% rental yield. And again, realistic is still below all of these buildings here. At 550 dirhams per square foot in rent, it's a 13% rental yield. So from an investment perspective, for somebody that's wanting rental yield, it's handing over in 12 months and you're looking at a 10% yield realistically on this one minimum. So that's where the opportunity is for an investor to come in on this project. And then grade A plus off-plan commercial comparables. Like I mentioned, there's not a lot of developers that are building commercial towers. A lot of them are building them but keeping it to themselves. But that, again, that's very limited in terms of the people that are actually building a commercial tower in the first place. But when we compare between Lumina, both of them are by Omnia, and then AHS, both of these two are in Business Bay. And then this one is connected to the metro station, similar to Lumina. But these ones were selling at 5,500 to 6,000 dirhams per square foot. But the important thing to note as well is the handover date of these ones. Lumina, you're waiting until nearly 2030 until you start getting a rental income or start getting a return from that. Whereas this one, you're getting a return within 12 months. And you're significantly lower in price as well. You're looking at about 50% lower price for this project. Grade A plus, you're right next to DIFC. In my opinion, it's the best off-plan investment right now. Does anybody have any questions? Yeah.
Are there any rules and regulations for, let's say I wanted to buy a half floor in here? Do I need to have a certain license to own a property in commercial?
Not the investor, so the people that you're renting it to, the businesses that you're renting it to, you'll need a license depending on the area that you're operating in. This project comes under the mainland license, so it's not within DIFC. So you're in the same category as Business Bay, for example. So this is why these are your competitors almost. Lumina and Enara, they're your sort of comparables because the same type of businesses are going to be operating within this building as you'd find in there.
And are there any extra fees than purchasing residential? So
it's standard 4% DLD as well. And there's no extra fees in terms of commercial compared to any others.